Welcome to the Capital News. I am your host, Alex Karitis. Today is Sunday, May 16th, 2021. Thank you so much for joining me. This is a Markets Overnight segment. I was off on Friday, so I wanted to make sure that I did a podcast this evening, sort of to talk about the markets last Friday. It was a rebound on the major indexes across the board, which is really not much of a surprise. We saw a lot of volatility last week, mostly to the downside. And the major U.S. indexes did close down for the week in the red, but they did see that nice, strong rebound on Friday. I don't know necessarily what to think of it other than it was just people buying the dip. I think that's really the mentality here until some more data points come out, even though we got the CPI and the PPI figures last week. We also got retail sales out on Friday, which were flat. The market was anticipating a gain of 1%, and it was flat. And this is what we predicted. Uncle Sam didn't issue any more stimulus checks. This has been a pretty easy trend to spot as of late. If you're getting a stimulus check, retail sales have been booming. Yeah, real estate has been booming too, and I'm sure those stimulus checks are going right into it. But retail sales have been going up when you get a check from Uncle Sam. When you don't, they flatline, they go negative month over month. That's been a pretty easy trend to spot. Now, with what's going on with the reopening of the economy, it may start to pick up a little bit more. Again, when you throw trillions of dollars into the system, I'll show you a good time too. The question is, how long-lived is all of this going to be? I argue that it's not going to be very long-lived at all, which makes all of these policies, fiscal and monetary, completely ridiculous, as I have been stating here before they even implemented them, before they were even penning, putting ink to paper for the Nobody Cares Act 1.0. I was saying, do not do this, because the government's only going to mess things up. It's only going to make things worse. And in fact, they were really the main driving force behind all of these market distortions to begin with, and we were witnessing a global economy that was weakening throughout 2019 into 2020, and then we have the pandemic, the lockdowns, the restrictions, and everything just goes to hell in a handbasket. All right, but it's very important to remember that a lot of this economic weakness was not solely caused by the pandemic. We were weakening. The United States and the global economy was weakening throughout 2019, as I was illustrating on this podcast throughout 2019 with one data point after the next. But the Trump administration, the Republicans in control of the Congress, and of course with the help of Democrats, because Democrats are always more than happy to spend more money that we don't have as well, they were able to kick the can down the road a little bit further. They were able to work and get along and pass trillion-dollar deficits. And again, give me an extra $1 trillion and I'll show you a good time. Well, that's what we did under the Trump administration. So things look good. Yeah, of course, if you're going to spend money, whether you have it or whether you just print it out of thin air, which is, of course, what we do here because we're a first world banana republic, we can make things look better than what they appear. And that's all we have been doing. And the day of reckoning is going to be extremely costly. We were talking about this at length last week because of the CPI and the PPI figures that came out. We said, look, we got all of this money from Uncle Sam. And look how quickly it evaporated. If you're somebody who is looking for a house, you're not going to get a house for asking price unless you're extremely lucky. You're competing with people, with a lot of businesses and big investors that are coming in all cash. They're ready to bid up that price, an extra 10 grand, an extra 50 grand, an extra 100,000 we're seeing. And depending on the area, it could be much more than that. And I happened to speak with a realtor this weekend, and that's the case that he's seeing as well. Big money's coming in, a lot of cash offers. Younger people, younger couples do not stand a chance. You have to be very, very lucky, right place, right time, and even that's no guarantee. That's how crazy this market is. Not a lot of inventory, but a ton of demand, and I think that this phenomena, this environment in which we live with respect to the real estate market, is going to persist throughout this year, because there is still a lot of liquidity in the system. There's still, you have this bifurcated economy, so you have a lot of big investors with a lot of cash looking to park it somewhere, and real estate's a fine place to do it, and they can charge rent. All right? So I think we're going to continue to see this, and that will likely continue to put upward price pressure, inflation, those are the effects of inflation, on a lot of those construction and building materials, which have already been going through the roof. We know the price of lumber is adding an additional $36,000 to the average new home build price. Okay, an additional $36,000. That is a huge amount of money. It was $24,000 back in February, so that's how quickly these things are moving. Now, lumber has pulled back a little bit, and we'll get to that when we go through market performance with what's taking place with markets overnight. But just be mindful of this. Nothing goes straight up, nothing goes straight down. But lumber prices have obviously been on a tear for the past several months. And if this trend continues, I wouldn't be surprised if you see lumber prices adding an additional $50,000 to the average price of the new home build. Okay, which would just be completely outrageous. But so much is everything else that we are witnessing because, Uncle Sam has to get his dirty, pudgy little fingers in everything, and the Federal Reserve also has to do this, and they have to finance all this nonsense. So it's a true shame. There is no responsibility, no accountability, and no leadership. Nobody wants to take the pain. All right, I understand this, but the further we continue with these policies, which have caused all of this madness and insanity, the worse the recovery, the worse the correction is going to be, the longer it's going to take. This is exactly what the government did that caused the Great Depression. Okay? Monetary policy and fiscal policy and the response thereof. They led the boom, they led the bust. They caused the Great Depression. All right, 1929, famous stock market crash, and then the 1930s was just terrible. All right, across the board. But as I've discussed here before, there is a depression in the early 1920s that is not discussed. And the reason it's not discussed like the Great Depression is because that depression didn't turn into a Great Depression because market forces were allowed to correct the problem. We still had politicians who understood free market capitalism. And they said the market caused it, the market's going to correct it. And that's exactly what happened. But because it doesn't fit the narrative that the government came in and did X, Y, and Z to save the, quote-unquote, save the day, well, then the government's not going to mention this because the government didn't get involved in the early 1920s to, quote-unquote, save it. Yet the markets miraculously recovered because that's what they do. Markets aren't perfect, people. I'm a major proponent of free market capitalism, okay? That doesn't mean it's perfect. It's all people. That's what markets are. People are going to make mistakes. It doesn't matter whether it's free market capitalism, socialism, communism, whatever ism you want to pick. It is not going to be perfect. The question is, what type of freedom do you have under that system? Can you vote freely with your feet and with your dollars? Or is it very controlled? Is it very centralized? And to me, that's a big difference. And history proves this out as to how successful a society can be when you adopt free market capitalism. All right? It's not perfect, but it's free. And those are the types of inconveniences that you want to deal with, not the inconveniences that you have to deal with when the government is dictating every little thing to us. And that is getting worse and worse by the day. All right? So it doesn't fit the narrative. So you don't hear about the 1920s depression, but you hear all about the Great Depression and how the Great Depression was saved by Uncle Sam and all of these politicians, which of course was not the case. Them getting involved caused the Great Depression. Make no mistake about it, and don't you ever forget it. Don't be fooled by what other politicians tell you on this, because they are flat out wrong. They just simply want to pat themselves on the back, congratulate the government for doing a job well done. Look at this program. Look at that program. It was terrible. Okay? The interesting thing with that, little history lesson, I've gone through this before, but I'll do it again. You had President Herbert Hoover, who was in charge, if you will, during the Great Depression and causing the Great Depression. But prior to that, he was the Commerce Secretary earlier that decade who went through that first depression. And he said, if I'm ever in a position to do something about this, I will not sit idly and just allow the markets to do their thing. I will get involved. I will intervene. Well, as fate would have it, he was president, and boy, oh boy, did he intervene. And he caused the Great Depression. FDR didn't do any better. And we're still dealing with a lot of those programs that were implemented then. We're still paying for them. And in fact, a lot of those programs are bankrupting us. Okay, so it's just not a good history. But free market capitalism, unfortunately, doesn't have a spokesperson to advocate for it on a day-by-day basis. The government, however, does. They got nothing but spokespersons all over the place in every single department telling you how virtuous they are, how great they are. You know, if it wasn't for us, you wouldn't be able to do anything. Aren't you thankful that you're paying all this money in taxes? Because look at what you're getting for it. Nothing. But they want you to make believe that you're getting a whole bunch of stuff for it. So there you have it. There's a little bit of a tidbit of a history lesson there. And we did a more in-depth history lesson sort of in the middle of the pandemic just to inform the audience of how similar the policies that were implemented during this pandemic were eerily similar to what was implemented that led to the Great Depression. And that's why I've been stating here over the past few weeks, this is a triple whammy as to what we're looking at right now and what we're going through. And that triple whammy consists of the fiscal and monetary policies that led to the Great Depression, this fascination with the tech sector and cryptocurrencies, which is reminiscent of the fascination with the tech sector back in the dot-com boom and bust era, which didn't end well, and with what is going on in residential real estate is somewhat reminiscent of the Great Financial Crisis. Now, there are differences, of course. That was really led by subprime, a lot of people who shouldn't have been in those homes, who never should have been given a loan in the first place, okay? This, on the other hand, this is a lot of cash. People are just coming in and buying these things outright. That's why I think this will continue to have some legs and some room to run. Because this is it. They have it. 100% equity. They got it. There's not as much leverage in the system. There's a lot more regulations that have been put in place because of the Great Financial Crisis, because of what took place in the subprime loans, and et cetera, during the GFC and subsequently. So this has some room to run. But with the prices where they are, with the rate in which they are increasing across the country, pricing out so many other people, I think this is going to end up eventually coming back to earth at some point. It will be painful because it's not just the housing market, it's all of these other things as well. Completely distorted because of the fiscal and monetary policies that have been implemented. It's just pricing so many people out of one financial asset after the next, and that is going to have ripple effects politically and socially speaking. It's always that intersection of economics, politics, and social issues. And a lot of people just look at one in isolation, and they don't understand the bigger picture. I try to step back, take a deep breath, and look at the bigger picture. If I push here, what's going to happen downstream? What's going to happen upstream? Not just looking at one thing in isolation, because that's not how the world works. It's not a static environment. It's very dynamic. It's very fluid. And I'm not saying we're always going to be right here. That's just not going to happen. Nobody bats 1,000. But at least getting that bigger picture, I think, is value add for this audience. At least I hope that it is. That's just how I think. So that's just basically what I'm giving this audience on a day in and day out basis. But I just think that it's important to be mindful of all of those things and how they feed off of each other. Because with what's going on globally, I think this momentum is just going to start picking up speed. It's going to pick up pace. It's going to pick up one other country after the next. As we spoke, I think, a couple weeks ago, a podcast, are riots, is social unrest, is it contagious? My argument is yes, it is. A lot of these movements can prove to be inspirational to a lot of people because you might have the poorest of the poor making a stand in fighting for themselves, their children, in the future of their country. That can be very inspirational to a lot of people because these people, they very well may be living and sleeping on dirt. Quite literally, that could be the case depending on the country. And then for somebody in another country, a more developed country, to see that these people are fighting, that can be very inspirational, because this is going to make its way, and it already is in many instances, in developed countries. And the United States is not going to be an exception. Developed nations were able to sort of kick the can further down the road because they have a little bit more flexibility in the financial markets. They can issue more of their sovereign debt. It'll catch a bid. And then with that money, they can do these crazy things that they've done. Smoke and mirror show. Give them money. Do this, do that. Let's make things look better than what they actually are. Just for a little bit. Just for a little bit. But that might be enough. And let's hope by the time the dust settles with all of this funny money, maybe there'll actually be organic growth, which is a virtual mathematical impossibility. You cannot throw this much more debt into and onto the system and expect any type of real organic economic growth. It's just not going to happen. It's saturating true organic growth. True organic growth comes from savings. It comes from productivity. It comes from innovation. That's not what we're doing here. We're printing this money and saying, here, go spend it, go do something with it. Money is supposed to come into existence via production, not printing press. If you don't understand this, then you'll never understand true economics as far as I'm concerned. You want to ride the bubble, you want to ride the wave, more power to you. You want to drink the Kool-Aid, it's your business. But if you want to understand sound fundamental economics, that's how it works. Savings, production, innovation, investment. That's how you do it. That's not what we do here anymore. It's what we used to do. And that's why we were the greatest country on earth, economically and in so many other ways. Now we're a first world banana republic. We're a laughingstock as far as I'm concerned. This is a joke. The only thing that allows us to get away with it is everybody else is a joke too, which is not a good thing. But that's how it's operating. So people need to wake up to this. You do not have growth via funny money. Just doesn't work that way. So we got some market performance here overnight. We got some news out of China. We have Chinese new home price growth at an 8-month high. Average new home prices in China's 70 major cities rose by 4.8% year-on-year in the month of April, accelerating to a 4-month high. Continuation here, one after the next, and the biggest annual gain since August of 2020. And don't forget, it was probably at least a month ago, probably a couple months ago, as fast as time is moving, where I mentioned that there was a statement by a Chinese regulator who mentioned a bubble in Chinese real estate, which is extremely rare for a Chinese bureaucrat to come out, somebody with a lot of power and authority in China to come out and make such a statement. Of course, before they did that, they threw the U.S. and European economies under the bus and said those economies are in complete bubbles. Here in China, it's just the real estate bubble. So if anything should happen, if there is some sort of systemic event, well, my analysis was they were setting the stage to sort of put the blame on the Europeans and the Americans. So that's something to still be mindful of, because it ain't slowing down in China either. And you want to talk about a smoke and mirror show. You ain't seen nothing. Overnight Forex, we have the dollar index at 90.41, slightly up about 0.1%. Bitcoin is down another 3% to trade at $45,000 a coin. So a lot of weakness here in Bitcoin. Is this just a major correction? I mean, the peak was at 65,000 not too long ago, and now we've given back $20,000 per coin. So that's a 30% decline. So you are well into bear market territory. So is this just going to be another bear market that Bitcoin finds its way out of, or is this something a little bit more serious where this could very well be the end of Bitcoin? And you have people on both sides of that argument. Of course, those who think it's the best thing since sliced bread think this is a massive buying opportunity and this thing is still going to hit 6, God only knows, 7 figures, whatever these idiots want to project. And then you got a lot of people who have been skeptical or bearish on it, saying this might be it. It's probably going to be somewhere in between there. Again, I don't have much of a use for Bitcoin. I mean, nobody can really explain it to me. Some of the other cryptocurrencies can be explained to me, and I can understand them, that there's an actual use case for it. But Bitcoin is just, it's just the solution for everything. And if it's the solution for everything, then it's the solution for nothing. So I wouldn't be surprised. I might be a little bit biased in my analysis and opinion of Bitcoin, but I wouldn't be surprised if this is more the beginning of the end as opposed to something miraculous with respect to Bitcoin. That's not to say other cryptocurrencies might really find a use case and really be here for the long term. And of course, blockchain technology and some other of those technologies that are coming from it. But Bitcoin to me is a joke. It's I really do. I think it's a joke. I think a lot of people are treating it very irresponsibly, and I think a lot of people, especially a lot of people who have very little experience in the financial markets, are getting hurt. And just wait until the government gets involved, because they will. And that may very well be one of the reasons why it's selling off, because this is supposed to be a decentralized platform, a decentralized asset. Well, what happens when a centralized authority, such as a government, gets involved and dictates what can and cannot be done with it? And kind of shoots that narrative right in the face, doesn't it? How can you have it both ways? And of course, the proponents of Bitcoin, there is never any bad news with Bitcoin. It's only great news, which is another thing, which sounds eerily similar to what it is with the markets, with the equity markets. There is no bad news. Doesn't matter what data point comes out. It's only fantastic because the Federal Reserve is going to do something, or Uncle Sam's going to do something, or there's actually a real economic recovery. So they can't lose, which to me sets us up for failure, which I think is likely going to happen in the not too distant future. But that's the overnight Forex market. We don't have too much movement in any of the currency pairs right now. Overnight futures trading on the U.S. markets, we have the Dow in the red, about 0.2%. The S&P also in the red, down about 0.1%, as is the NASDAQ 100. Cash trade in Japan is giving back 1%. And as I stated earlier on the podcast, it was just a sea of green on Friday, even in Europe, across the board. Cash trade in Australia putting on a gain of about 0.25%. Chinese stocks also in the green, up 0.7%. And Indian stocks also up 1%. On to commodities. We have WTI at $65.23 a barrel. Brent $68.50. Natural gas above $3 at $3.03. Gasoline $2.12. Gold and silver looking good overnight. Gold at $1,854 an ounce. Silver at $27.67 an ounce. These were some numbers that I was mentioning last week. From a technical standpoint, gold, I really want to see gold bust through $1,870 an ounce. It has been slowly but surely taking out one level of resistance after the next. And I like that. I don't like these big moves because anything that spikes up can spike down. I like this slow and steady wins the race. That's just, my mentality. That's my style. But I like what gold is doing right here and with silver. But gold, if it can bust through 1870, I think we got a good run at 1900. And then if we breach above 1900 and hold there and maybe consolidate for a little bit, I think we could very easily test the all-time highs that we witnessed last August, which was close to $2,100 an ounce. And if we get to that point, then who knows what's going to happen, because there is a lot of room to run to the upside with the price of gold. Silver, $28. And again, we're at $27.67 an ounce. So $28 was the level that I was looking for. If silver can breach 28, do the same thing, consolidate maybe for a little bit, there's a lot of room to run to the upside. I think it'll end up hitting $30, probably get a lot of resistance, get pushed back down perhaps, but the more it knocks on those levels, the greater the increase that it will end up breaking through it. And if it can bust through 30, we may very well start to make a run for those all-time highs back at around $50 an ounce. So I'm excited from a technical standpoint and from a fundamental standpoint. The fundamentals have been rock solid for gold and silver for a very, very long time. I think the markets have been foolish in truly understanding the value that exists within gold and silver. And we also know that there is a ton of manipulation that goes on in these markets. This is not conspiratorial deferred prosecution agreements, ladies and gentlemen. You can find these. You can look them up. They have been reported in the news, okay? One major bank after the next, manipulating the precious metals markets and other markets, surprise, surprise. And Uncle Sam doesn't go after them. Slap on the wrist, pay a fine, a fraction of what they ended up stealing, ripping people off on. And on they go. So it's again, to me, the market being foolish, but that's our opportunity to get involved in these plays if you think it's right for you. I personally think it's right for me. Precious metals, commodities, things that you need. Things that have proven the test of time. Cryptocurrencies have not proven the test of time. You want to put your money in it? It's your business. Good luck. I'd like to bet on things that have been around and things that people actually need to function. Okay? So pay attention to those things because I think we could be in for a wild ride to the upside. Which could be a very good thing. Copper's at $4.69 per pound. Lumber pulled back $1,560 per 1,000 linear board feet, but still at an extremely high price. Okay, this could just be a cooling off period, and it could go on to make new highs. I mean, it could do it tomorrow. That's how crazy we've seen these price moves in a lot of these other commodities. Uncle Sam's 10-year junk note is yielding 1.61%. So that's some of the market performance, and then we've been talking about Israel and Palestine here past couple of weeks, because of what's been taking place there, unfortunately. So here's just a brief update. This is out of Al Jazeera. This is sort of their live reporting, so this is extremely recent. So title is More Israeli Raids in Gaza as Bombing Enters the Second Week. Okay, again, out of Al Jazeera. The Israeli military launched another series of air raids on the Gaza Strip early on Monday, hours after Israel's caretaker, Prime Minister Benjamin Netanyahu, said the attacks on the Palestinian enclave would rage on. Explosions rocked Gaza City from north to south in a bombardment that was heavier on a wider area and lasted longer than the air raids that killed at least 42 Palestinians and wounded dozens more on Sunday. One Palestinian was reported injured. Earlier, Hamas fired rockets towards the Israeli cities of Ashkelon and Beersheba. At least 192 people, including 58 children and 34 women, have been killed in the Gaza Strip since the latest violence began a week ago. Israel has reported 10 dead, including 2 children. The United Nations Security Council met on Sunday to discuss the violence, but failed to agree on even a joint statement of concern. China said it was the United States that obstructed the council from speaking, quote, with one voice, end quote. So that's very interesting. The United States always takes the side of Israel. The rest of the Security Council and really most of the globe, even a lot of the allies of the United States, tend to side with the Palestinians, or at least take a more neutral stance to the situation. And, I really don't have sympathy for either side for the most part. I mean, clearly I don't want to see this type of violence occur. But I'm not really appreciative of the United States taking the side of Israel no matter what. I think that's foolish. I think it's very lopsided. And just if you understand the history of everything, it's not a prudent move either. It's just not a prudent move. I mean, obviously the mainstream media in this country is going to continue to push for that alliance and that allegiance with the Israelis, but I don't necessarily think it's warranted, personally speaking, just with some of the history that I've come across, because you have to listen to both sides of the story. You can't just take one side and say, oh, well, that's it. You have to listen to both sides and then make a judgment. I mean, we shouldn't be involved in any of this stuff to begin with. We were told that from George Washington. All right, we've been told that a long, long time ago, and of course we don't listen. So I don't like it. I don't like that we always just bow to Israel and take their side on everything when there's a lot more to the story, believe me, when I tell you, and there's nothing but history on it, so look it up. And I can almost guarantee you, if you do take an objective look at it, and you read both sides of the story, you'll come down on a similar path as I do. So unfortunately, this conflict continues to go on. But I have to say that none of us who have been with the Kapital News for a while should be surprised by this either. I think this is just one of many, many hotspots around the globe that is erupting or on the verge of erupting. And a lot of this has not been priced into the markets. And if and when it does get priced into the markets, and it actually comes to fruition, as bad as things that I think, as bad as it could possibly get, then we're in for a big doozy. So that's Market Overnight segment. Hope it was informative. Again, my apologies for being off on Friday, but we'll be here throughout the remainder of this week to keep you updated on these breaking news stories and a lot of the economic data points that will be coming out, and we'll try to do our best to tie it all together and paint as vivid a picture as possible so you know what to do. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.